Wall Street rallies as the US Fed leaves interest rates unchanged for the second straight meeting. Chairman Powell does not rule out further hikes with inflation still above the 2% target, although the committee has upgraded its assessment of economic growth. Stocks in the Asia-Pacific too surge after the US Fed holds rates steady. The Gifty Nifty is also suggesting a higher start for the Indian market. Crude prices hover around that $85 a barrel mark as the market remains on edge over the conflict in West Asia. Gold sees some cuts but continues to trade near $2,000 an ounce as the Fed holds rates steady with a hawkish bias. Tata Steel delivers a weak second quarter as the European business drags. Britannia's revenue growth missed expectations, but a strong operational performance sees profits surge and margins expand. Hino Motors numbers meets estimates in a good quarter, and the management is optimistic about the growth momentum going ahead. In key earnings to track today, Tata Motors is likely to deliver steady growth even amidst a mixed performance from the India business. Adani Enterprises, Dabur and Godrej Properties will be the other results to track. Good morning in the Mumbai News Centre. I'm Sonam Bhutra. You're watching Power Breakfast. Those are the top headlines, and clearly the big news of the day is that Fed has held on its rate hikes, and that is something that has buoyed the markets globally. So let's take a look at what the Asian markets are doing. It's been a strong handover from Wall Street, and as I said, there has been a pause for now at least. There's been no hike, so to say, in rates by the Fed, and on the back of which we've seen Hang Seng gaining by 2%. The Taiwanese index is also up 1.68% as we speak, and it's a green-looking screen across the Asian markets. The Nikkei is up 1%. We have something like a Straits Time, which is high by 0.5%. Shanghai, too, is up around 0.2% as we speak. And the Gifty Nifty, that'll come up for you on the screen because that one is indicating that the start for our own markets, well, that could be in the green. In fact, it's a gap-up opening that the Gifty Nifty is implying right now, 165 points higher after weak session that we saw yesterday and the day before that. So it looks like it could be a good session for our own markets as well after some weakness that we saw. So let's move on to the US markets now. Wall Street ended Wednesday's trading session higher. The Dow surged 220 points while the S&P 500 climbed 1%. The tech-heavy Nasdaq also closed 210 points higher. Meanwhile, ADP has reported that private sector payroll growth increased modestly in October but missed expectations, in a potential sign that the employment picture could be darkening. And now the big global macro cue coming in is that the Federal Reserve has held rates steady at yesterday's policy meet for the second time in a row. CNBC's Steve Leisman has more details on this.
Let me go through this. They left rates unchanged for the second meeting in a row. That range of 5.25, 5.5, that was as expected. But Fed Chair Jay Powell, I think he provided a modestly dovish outlook that suggested at least that additional rate hike may not occur. And I say may not advisedly, while he affirmed that the takeaway from the statement is that, yes, policymakers are leaning towards that hike, as said. That is, by the way, in most committees' members' forecasts. Powell said it was unclear if that hike would occur. That's because risks between doing too much and doing too little were now becoming more balanced.
It's fair to say that's the question we're asking is, should we hike more? It's not, you know, and that is the question. And you're right that in September we wrote down one additional rate hike. But, you know, we'll write down another forecast, as you know, in December.
Powell said the rise in yields was among the reasons that the Fed could hold, at least at its current level, with sharply higher rates doing the work for the Fed and restraining economic growth. But he said those gains have to be persistent in order to hold the Fed at bay. So let's look at what happened. Today, the yields fell sharply and meaningfully, with the Treasury announcing a slightly more upbeat refunding plan for the growing U.S. debt and with the announcement from the Fed. Okay, so the Fed's statement upgraded the economy and jobs, but noted that tighter financial and credit conditions would likely weigh on the economy. The result of all this, the Fed remains on temporary hold until the economy slows and makes clear inflation continues to decline. Powell suggested that was more likely, but he would not go so far as to say it was a certainty.
Okay, so on that note, let's hear out some more comments coming in from the Fed chair on inflation, price stability, and uncertainties going ahead.
We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. We've come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think one or two additional hikes. So you're close to the end of the cycle. That was an impression as of a belief as of September. It's not a promise or a plan of the future. As the Fed, as the Federal Open Market Committee, our job is really to understand the economy and the economic effects. And it isn't clear at this point that the conflict in the Middle East is on track to have significant economic effects. That doesn't mean it isn't incredibly important and something for people to take really important notice of, but it may or may not turn out to be something that matters for the Federal Open Market Committee as an economic body. But what the Financial Stability Report does is it calls out risks, and that's what it's doing, is calling out a risk of that. And the war in Ukraine, the same. The war in Ukraine, did have immediately very significant macroeconomic implications because of the connection to commodities.
Okay, let's stay with the Fed decision because that's the big story that we're tracking, and listen into opinions coming in from a whole range of experts on what they made of the decision and Fed Chair Jerome Powell's comments as well.
I don't think there's been a more dovish press conference since this all began, and even in the lead up to rate hikes last March when he was prepping us for us. I mean, he said that the balance of risks for over-tightening versus under-tightening are basically now symmetric, which is something new. He didn't say it, that wasn't in the statement, but that was reiterated twice during the press conference. That was my biggest takeaway, is that I actually thought it was as close to a victory lap as I've seen, which I'm not sure is what he wanted to give us, but he gave it to us. And I think the market's applauding it, but he has to be quite careful with it because he did reserve the right to come back if inflation picks back up. He could definitely give us another one or stick with higher for longer for a much more extended period of time, which is certainly plausible and probably even likely.
I think the market likes carefully. So stocks rallying, bonds obviously rallying too. We're down now about 25 basis points. But also, he said they're not even talking about cutting interest rates. They're not even having a discussion about it. And yet at the same time, he's not confident that they're sufficiently restrictive. So the door was left pretty much wide open for future flexibility at meetings. And, the yield curve is completely flat. So it's kind of in the same mode, I think, that the Fed's tone was, that Jay Powell's tone was. And that's a reason why you can rally after this brutal sell-off in long rates over the past 2-3 months.
They're done if conditions allow them to be done, conditions that we really cannot predict very well for the coming months. But if their current outlook holds, there's a good chance they are done. But they're not done because they've made a decision to be done. I think Powell and company will keep their options open.
Okay, that's all the analysis for the Fed's decision, but we'll slip into a break now. And when we return, we'll tell you how this big news and the other domestic cues will impact our own markets in our Power Prep segment. Stay tuned for that. CNBC TV18. This is our Power Prep segment. So we have our research team joining in with what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, it's time to come to you now. What is the market setup looking like today? Looks like a good start.
Absolutely right. Good morning. Now that the major event is out of the way, most of the US indices, like we mentioned before, have given a relief rally. Yesterday, what actually happened is that all of the US markets, including the Nasdaq, gained quite significantly. Now, crude oil movement, one that we focus on. Now, Brent futures yesterday gained and now hovering around the $85 a barrel mark. But coming to the Indian markets, yesterday's trading session, range-bound session, but the Nifty did close below the 19,000 level, and that will be one important level to continue to track even in today's trading session. The metal index yesterday was the top sectoral loser. JSPL, remember, was the top laggard, and yesterday's results of Tata Steel too not very encouraging. So that will be one pocket of the market that we will continue to keep an eye out on. Now, along with that, also remember the rupee yesterday reached an all-time low. So along with that, all of the IT companies too will also be something that we would need to watch out for. Key cues today, result reactions. Remember, Tata Steel, Britannia, GCPL, Hero Motor, all of these companies declared their results post-market as yesterday. Markets will react to that. And some key results today, Tata Motors, Container Corporation, Dabur, these are some of the companies that will be declaring their results today. Asian markets, Gifty Nifty, both of them indicating a gap up start for our own markets.
Yes, gap up start it is. That is what the Gift Nifty is implying today. Thank you so much, Vivek, for joining us with all those cues. Over to Surbhi now. She has a long list of stocks that she's tracking for us today. Surbhi.
Good morning. So it is a long list. Let me start with Tata Steel. The numbers were weak, primarily led by losses in the Europe segment. Revenues at 55,682 crores, margins in 7.7% versus a poll of 8.4%. Britannia, it was a miss on the top line, but the company saw a sharp margin expansion. Revenues at 4433 crores, EBITDA at 872 crores, and margins at 19.7% versus a poll of 17.5%. Hero Motor, it was a decent set of earnings. EBITDA in line with estimates. Revenue up 4.1%, EBITDA up 28%, margins at 14.1%. Godrej Consumer, the revenues at 3,600 odd crores, EBITDA at 704 crores, and margins at 19.5%. Nerolac, weak top line growth, but the margin improvement was good. Revenue growth of just 1.3%, EBITDA growth of 37%, and margins at 14% versus 10% same time last year. Sirma SGS, again, good revenue growth, but margins were weaker. Revenue up 52%, EBITDA up 4%, and margins at 6.9% versus 10.1% same time last year. GMDC, it was a weak set of numbers. Revenue down 29%, PAT down 51%, and EBITDA down 69%.
Okay, all right. Thank you so much for joining us with all those details, Surbhi. Let's talk all about the F&O space. Nigel is joining in with all those cues. Hey, Nigel, morning.
Morning. Yesterday we ended a little bit lower, and it wasn't the Nifty Bank that played out weekly expiry that in fact dragged in the final hour of trade. It was the Nifty IT index that was under some pressure. So you see, the Nifty Bank actually came off the day's low at around that 42,500 odd. But that's the one we're talking about. The Nifty IT index did move lower. The fear could have been that maybe, in fact, we heard a hawkish-sounding Fed governor, and that's what could drag the Nasdaq as well as the IT stocks today. So it was some pre-positioning that we saw. I expect that to reverse today, given that the commentary coming in from the Fed has been read dovishly. And in fact, you have the bond deals as well that have cooled off. So the IT index is something that I'll be looking at. What did the FIs do yesterday? Well, they added shorts yet again. They added close to around 10,000 short contracts and 5,000 long contracts, which takes the short positioning in percentage terms to around 85%. But in absolute terms, it's the highest we have seen since the end of March. And that's the time from where we did see a bit of a bounce on the Nifty, and that's where the Nifty made a bottom as well. So as we speak, the Nifty, the FI net short positions on the index futures is at around 1.6 lakh contracts. It's gone up marginally from the start of the series from around that 1.5 lakh contracts on. Two strikes were very active yesterday. You saw the 19,100 call and the 19,050 call. Well, between them, they added close to around a crore shares on. So aggressive writing is what we saw at that level, which got the PCR from around that one that we saw just a couple of sessions ago. It's come down to around 0.82 odd. So it's trading closer to around the lower end of its band. So the levels that we're tracking at, since the 19,050, 19,100 call were written very, very aggressively, I punch in the premiums that we saw yesterday, and around 19,170 becomes important resistance zone. On the downside, 18,950. That's been a bit of a buy zone, and that continues to hold. So Gift Nifty suggesting we open above that resistance zone that I've given you. Well, we need to sustain those levels. That's going to be very, very important, because as of now, today is the weekly expiry, and positioning is such that we don't get past that 19,170 odd mark. Back to you.
Take that point. Thank you so much, Nigel, Surbhi and Vivek for joining us and prepping us up for this trading day ahead. We'll slip into a break now. Up next, we'll get you all the cues from the commodities market as always. Stay tuned for that. Welcome back. It's time to focus on the latest in the war between Israel and Hamas. The Israeli ministry on Wednesday announced the killing of another Hamas commander in the second strike on Gaza's largest refugee camp in Jabalia. This comes after the airstrike on Tuesday that claimed more than 50 lives. Bolivia announced it is cutting off diplomatic ties with Israel, accusing it of crimes against humanity in Gaza. Meanwhile, one of Israel's oldest Arab partners, Jordan, recalled its ambassador to Israel. At least 320 foreign passport holders on an initial list of 500, as well as dozens of injured Gazans, crossed the Rafah border crossing as part of a deal struck between Israel, Egypt and Hamas. U.S. Secretary of State Antony Blinken will travel to Israel and Jordan on Friday and is due to meet Israeli Prime Minister Benjamin Netanyahu. Okay, all right. On that note, let's move on and talk about all the action from the commodity space. Manisha Gupta is joining us as always. Hey, Manisha, good morning.
Morning, Sonal. Thank you so much for that. Well, I'll start with the crude oil prices, where we have seen a rebound from a 2-month lows. The prices are holding above $85 a barrel. Well, the U.S. stocks grew less than forecast at 0.7 million. For crude prices, though, is the fact that the China PMI and the U.S. factory numbers also have contracted for the month of October. And markets will now watch out for the Bank of England monetary policy meeting today. It also is the U.S. non-farm payroll data that comes in tomorrow, and that would give us further direction. In the meanwhile, the gold prices also are nearing its 5-month highs. We have seen prices gain up by 7% in the month of October, and November has started on a positive note. Powell has said that there is still no clarity if the committee is done raising rates, and that continues to keep the prices in check.
Okay, all right. Thank you so much, Manisha, for joining us with all those details. So that's all that's happening in the commodity markets. Moving on now, about 1 lakh crore rupees could be tied up in the appeals process once GST Appal Tribunals become functional. Government sources say this could happen by April 2024. Timsi Jaipuria is joining us with the details. Timsi, why is there this expectation of such a large cachet of appeals?
Well, that's right. In what might be a game changer for both the government and the industry, sources have told CNBC-TV18 that over 1 lakh appeals involving more than 1 lakh crore is expected to hit the GST Appellate Tribunals once it becomes functional. Sources share that the government expects Appellate Tribunals to be functional by April 2024, and it is understood that both the government and the industry aim towards the fact that once these Appellate Tribunals come into existence, they will ease litigation burden on high courts in the country. Government has notified creation of GST Appellate Tribunals on October 27th itself, and now sources share that the industry is likely to file appeals in large numbers as soon as these Appellate Tribunals come into existence against several adverse GST orders. However, industry has requested the government to consider a representation which shares that the amount of pre-appeal deposit with these appellate tribunals is really high, and they feel that it is going to hurt the working capital for many firms. The pre-deposit amount has been hiked to 30%, and in cases of high value GST cases, especially under CGST, the amount has been hiked to 50 crores, and in IGST cases, it has been hiked to 100 crores. Government aims to have 32 benches of appellate tribunals, including one national bench in the first phase, and this is likely to increase in the second phase to about 62 benches across the country. So let's see how soon these appellate tribunals come into existence and how soon the litigation burden gets shifted to these tribunals. Back to you.
Okay, Timsi, thank you so much for joining us with all those important details. Let's move on now. Within a fortnight of the Supreme Court's decision on the same-sex marriages, a petition has been filed seeking review of the verdict given on October 17th. The review plea was filed by Udit Sood, one of the original petitioners in the case. And the petition says that the decision is erroneous and the apex court needs to correct the same. Okay, so this is, of course, a developing story, and we'll keep getting you more details in this one. It is an important verdict as well, and an appeal has been filed against that. We'll quickly take a look at the Asian markets because clearly there's a lot of action that's happening there. We do have most of the Asian markets which are trading with gains. Hang Seng, though, has come off from the highs. It was up around 2%. Right now, it's up around 1.1%. So there has been some fall from the highs of the day, still managing to be in the green with good gains right now. Taiwanese index is up 300 points. We do have the Kospi, which is higher by 2% right now. We have something like a Nikkei, which is trading with gains of 1.1%. 1%. And also, we have something like a Shanghai, which is actually underperforming, but in the green right now in the Asian markets. The Gifty Nifty will also come up for you on the screen because that one is indicating a gap up start for Indian markets. It's the weekly options expiry as well, and a lot of earnings that we are tracking, a lot of Nifty reactions as well. And even in the US markets, the focus has now shifted from that event where Fed has held on to the rates to earnings right now. So earnings continue to be the focus point right now across most of the global markets as well as in India as well. Look at that. Dow Jones up around 0.6%. We have Nasdaq, which was a big gainer, 1.6%, on the back of which we'll be looking at IT stocks in the Indian markets as well. So yes, looks like it could be a good day for our own market. So we'll keep tracking that for you. But for now, we'll take your leave on this edition of Power Breakfast. But do stay tuned. We have a lot for you on Bazaar Morning Call that comes up next.